Welcome to the Funeral Funds Life Insurance Podcast. I'm your host, Randy Vandervate from Funeral Funds of America, and you can find us at funeralfunds.com. That's funeral, Funds.com. Whether you're interested in term life, whole life, annuities, disability, business continuation, or final expense life insurance funding, we have you covered. Our team of experienced professionals will guide you through the complexities of insurance products to help you make an informed decision. In this podcast, I'm going to be discussing beware these four types of burial insurance. Let's get right into this. Everybody, if you've listened to me at all, you know, number one, it's going to be guaranteed issue life insurance. Beware, beware guaranteed issue whole life insurance. What that means is it's like the policies you see advertised so much on TV, like those 990 something plans or whatever, and you think you're going to get a good deal, and I think you're going to get 20, 30, 40, $50,000 for 990 something, and then you read the fine print, you find out it's got a 2-year waiting period plan, right? And you go, oh man, I don't want a policy with the 2-year waiting period. I want first day coverage. And you find out that in that little fine print that only blinks on the TV screen for just a moment, that it says, limited period or limited benefit period or something like that. And what that means is it's going to have a 2-year waiting period. Now, I guess if there's an advantage of a guaranteed issue life insurance, it's that it doesn't ask any health questions. But, that's not to your advantage, really, in most cases, because most people are healthy enough to qualify for what we call first day coverage. That means if your policy were issued and approved and went in force today and you died tomorrow, the insurance company would have to write a check. A good example is maybe you paid a $50 premium today. Your policy went in force for $15,000 and you died tomorrow. Just bad luck on the insurance company. They insured the wrong person, and you died. You just done went and died, and they're going to have to pay that $15,000. With a guaranteed issue life insurance, if you did the same thing and you died, let's say 2 years minus 1 day. I mean, you made it almost the entire 2 years minus 1 day, and you died. You know what would happen? No death benefit. They would refund your premium plus a small percentage interest, typically like 7%, 8%, or 10%, something like that. So yeah, just those TV commercials, and just a lot of companies out there really advertise the guaranteed issue whole life insurance, and they say, hey, it's easy, no medical exam, no health questions, none of that, but you end up overpaying so much. So on YouTube, our YouTube channel, we did a series of over 300 videos, and we took male and female, and then we did it 5,000, 10, 15, 20, and 25,000 for every age, 50 to 80. So over 300 videos. And we dissected that. And one of those companies was one of that 990 something company that you always see on TV, right? And yeah, what we found out pretty much across the board throughout every age and everything, it averaged out, they were on average 200% more expensive, plus or minus, but pretty consistently 200% more expensive. And you had a 2-year waiting period, and you were going to have to overpay on that policy for the rest of your life. So, oh man, the pricing is awful, and on 2-year waiting period plans compared to first day coverage. So if you qualify, get first day coverage. If you're not sure if you're qualified, just reach out to us. We can certainly help you out and shop a whole bunch of different insurance companies and make sure that you got the best opportunity to get first day coverage. Now, the second type of burial insurance to avoid is accidental death. And boy, accidental death policies are very cheap. Some would say affordable, but I mean, they're pretty cheap. But the thing is they only pay out if you die as a result of an accident. They will not pay out if you die of cancer or a heart attack or any other health or medical reason. You got to die of an accident. And the reason the policies are so cheap and or affordable, right, is because the chance of you dying in an accident are very remote. The amount of premium really indicates the amount of risk. And if the accidental insurance policy is super cheap, it means chances are you're never going to use it. So if you were younger and you were, had a hazardous occupation or you engaged in hazardous activities, you know, accidental death would not be a bad deal. A lot of truck drivers, big 18 wheelers, accidental death makes a lot for them. They're on the road all the time and accidents happen all the time. But yeah, when you're 60 to 70 to maybe 80 years old, you're probably not getting crazy doing crazy stuff out there. And accidents still do happen, but the chance of those policies paying out is very remote. Most of the accidental policies are going to stop at a specific age too, and that's not going to benefit you as well. Let's jump to number 3, modified whole life insurance. So this is a graded policy, and it's it's actually uh, it's worse than the guaranteed issue whole life insurance, in my opinion, in many cases. Now, a lot of times what that would mean is that if you died, and to even have anybody recommend this policy, you'd have to be in pretty rough health. And even at that, you'll find out why we don't necessarily recommend it. So what it would possibly do, one example is it would pay 30% in the first year if you passed away from any health or medical reason. So if it's a $10,000 policy, it would pay out 3,000. In year 2, it would pay out 70,000. So, if you died of a health or medical reason in year 2 and were a $10,000 policy, it'd pay out 7,000. So I mean, you might go, well, that's better than guaranteed issue. At least I'm getting some money. Yeah, but hold on. So in year 3, finally, it would pay 100%. So it's essentially, in many cases, a 3-year waiting period plan versus a 2-year waiting period. And also the modified insurance, because they stretch it out so long, I mean, it's really significant health issues. And the pricing is punishing. It's in many cases so much worse than guaranteed issue whole life insurance that you may just kind of wonder if they even want you to buy the insurance with some insurance company. So every company has different percentages, every company has different rates, but man, modified whole life is, in my opinion, shop around. If you have any doubt about that, just reach out to us at Funeral Funds. We can run rates for you. We can find out about your health and actually find out what you qualify for. And 90 to 95% of the time, our clients are calling for first day coverage with any one of our different insurance companies. Now, the fourth type of burial insurance to beware of is pre-need burial insurance. This is the type of policy where you go down to the funeral home and it's designed to cover the cost of your funeral expenses. However, there is some kind of deficiencies traditionally with these plans. In many cases, you're limited to a specific funeral home or a specific service chosen. And think about that. You know, whenever we get these insurance or these plans in place, none of us wants to use these plans anytime soon. If we could put this off 20 or 30 years, that's great. We want to live longer. So, one of the challenges is, businesses struggle sometimes due to the economy or revenue or whatever. And to predict a small funeral home that they're going to be in business, decades and decades from now, boy, there's no guarantees, right? So you could invest all that money and have done everything right, and they go out of business and you lose your money. Some of these funeral homes, they invest that money into funds that they get interest on, and that's how they kind of keep pace with these things with inflation. But it really depends who they're doing the investing into, because maybe that investment goes back. Maybe there's some embezzlement or something like that. So there's all sorts of things that can go wrong with pre-needs. The other thing too is, what if you decide to move? And everything's tied to that funeral home. Maybe you move out of state. Now what are you going to do? Are you going to transport your body back to there? That's going to be super expensive. So you could lose kind of your benefits there as well. And then, what if you're traveling internationally? Now that money's gone. So in many cases, A lot of people would consider first day coverage, whole life insurance, final expense insurance to be better. The other thing too is pre-need is if you can afford to pay everything all at once, it's all paid up from the very first day. So that's a better way to go. But chances are most people, if they don't have money to kind of do that, they're going to have to make payments on it. And, it's not going to pay out the whole funeral until you get all of the pre-need agreement paid out and worked out. So if they were saying, hey, it's going to cost $10,000 and you're paying $50 a month, that's going to take a lot of years to pay off. And the nice thing about burial insurance is it can pay out from the very first day. So if you're wanting to protect your family, everything's taken care of from immediately. And it just eliminates a lot of worry. So I know this is a short little podcast, but those four types of burial insurance, you should absolutely beware and be very cautious of. My name is Randy Vandervate, and I hope this podcast has been helpful to you. Funeral Funds of America can help you qualify for first day coverage or benefits at funeralfunds.com. That's funeral, FUNDS.com. And our phone number is 888-862-9456. We will be blessed to help you with this in the future. Until that day comes, stay safe, take care, and have a nice day. Bye-bye.